Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A second bullish white soldier yesterday, and a follow-on to the previous session's bullish engulfing pattern. However, once again, the market was capped in its rise by the same overhead combined dynamic resistance that has done so imperfectly, I grant you, since May 2020. As the combination of the upper time, currently at 113.89, of the broken January to May 2021 bearish Andrews pitchfork, as well as the declining medium moving average, currently 113.99. These two bearish resistances, though breached and broken, have again successfully kept a lid on the market and pressured it lower, something that started way back last year. Below we have the following significant support levels. The short medium moving average, currently 113.26. The lower trend line of the November 2021 to January 2022 ascending triangle, currently at 113.22. The neckline, currently 113.11, of the April to May 2020 reverse head and shoulders pattern. And finally, the interesting 61.8% Fibonacci line of the March 2020 to January 2021 move at 112.89. All the action since the start of the year continues to be reminiscent of a potential pattern build-up, such as a diamond pattern or a cat's ears pattern or something similar. Unfortunately, it's still not that clear, but it will become so, and soon. So far today, a drop down to the previous significant support levels before a pullback up. This market is getting squeezed between the nearby supports and resistances, and something has got to give. Cable, aka sterling against the US dollar. A second bullish white soldier yesterday, though the move up is a limited one, as the previous session was more like an indecisive spinning top. However, the most interesting feature has been how the market broke up and closed over the upper time, currently 135.48, of the October 2021 to January 2022 bearish Andrews pitchfork. This was significant, as this upper time had been a barrier to any move higher for some 2.5 weeks now, at least on a closing basis. This is also the result of something I mentioned yesterday, how the market was getting squished between the upper time above and the supports below, and the supports of the 2019 high at 135.16, the flatlining medium moving average currently 135.04, and the September 2020 high at 134.83. We now have the wide but narrowing combination overhead as resistance of the lesser Fibonacci line at 136.54 and the July 2021 to date downtrend currently at 136.69 and declining long moving average currently 136.86. Finally, I have droned on interminably about the longer term whole of 2021 double top pattern, Adam and Eve type. The original targets were initial target X2 in the 133.60 area and secondary target X3 in the 131.10 area. Target X2, the initial target, has already been achieved. That was late last year. Target X3, the secondary target, is still out there. As you can imagine, with yesterday's action, this target is just so much harder to reach. So far today, a bit of stabilization today it seems. A dip down to the breached upper time, but then a pullback up and a cautious cap, roughly based on yesterday's action so far. Looking a little bit indecisive, possibly an indecisive spinning top. Euro sterling. A reactionary bearish dark cloud cover pattern yesterday, thus killing off any idea that the previous three sessions might be a possible bullish morning star pattern. Below, we now have the previously mentioned congestion between 83.60 down to 83.36. Plus the broken but potentially still potent lower falling wedge trend line, currently 83.32, of the old August to December 2021 falling wedge pattern. I've also drawn a fresh mid-December 2021 to early February 2022 bearish Andrews pitchfork. Now this is an early pattern, so I'm quite happy to retire it if it doesn't look like it is working, though the middle time, currently 83.34, seems to have some merit. Finally, we're just under half of February to go. It is interesting to see that we are already set up for a possible monthly key reversal in February. If we close on the 28th, either over 8,400 or under 8,350, then we'd be on. Right now, we're looking at a lesser outside month, but we are really close, so close into moving into a monthly key reversal down for now. So far today, a slightly higher open for a small test up to the overhead short moving average at 83.79 before a fresh attempt lower and towards those supports. US dollar against the Indian rupee. A second bearish black crow yesterday and a more than suitable follow-on lower to the previous session's big key reversal down. The drop was halted upon approach to the combination area below, consisting of the lower wedge trendline currently at 74.88 of the recent possible rising wedge pattern. Additionally, we have some further significant supports in the form of the flatlining short-medium moving average currently at 74.90 and the slowly rising medium moving average currently 74.33. As mentioned in recent days, this move down counters an idea of the 2022 action so far. Instead of being a possible bullish halfway hesitation, may instead be morphing into a possible rising wedge pattern. However, for the moment, I will leave target X in the 75.90 area as a target on a daily chart for this possible bullish halfway hesitation. So far today, a lower open, moving close to the moving averages and the lower trend line, wedge trend line, but then turning back up, though still within yesterday's main body of action. Below these supports, we have nothing of note until the 50% Fibonacci line of the April 2020 to February 2021 move at 74.63. US dollar against the Brazilian real. A third bearish black crow yesterday with a new low not seen since late August last year, and a more than suitable follow-on lower to the previous session's bearish open and close black Maribosa. Prices are now in a fairly free zone, all the way down to the interesting 38.2% Fibonacci on the big October 2019 to May 2020 move at 510.87. Meanwhile, overhead, we now have the full Fibonacci-based band of congestion between 520.27 and 526.79. However, over all of this, what has been more important is the market has still kept within the cone of the early January to date declining broadening wedge pattern, currently at 25.98 to 44.89.03. This wedge pattern, as detailed in its name, has been dictating the moves lower since about mid-January. US dollar against the Mexican peso. A fourth bearish black crow yesterday, and an important one, as the market has broken down through and closed below the supports of the lower time, currently at 20.3677 as a new September 2021 to January 2022 bullish shift visual, plus the nearby slowly rising long moving average, currently at 20.3324. This is a major breach lower and may become a major break lower. Additionally, the market punched down through but did not close below the 2022 low at 20.2660. As I previously mentioned, I was unsure how strong this support would be without the aid of the long moving average. We next have supports at 20.2377, 20.0066 and 19.92 even. Though the next sizable support will be the extension of the lower trend line to the June to September 2021 descending triangle pattern. That's currently at 19.9765. Finally, I've also drawn a new mid-December 2021 to late January 2022 bearish Andrews pitchfall, which has shown some promise. Right now, the market is in between the upper time, currently at 20.51.5, and the middle time, currently 20.0655. Finally, there is the possibility to look at the late September 2021 to date action as a possible head and shoulders top or head and shoulders continuation pattern. I will ponder on this idea a little more. So far today, a retracement back up to the long moving average before a fall back down, but not below yesterday's low as yet. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.